Hello, and welcome to part 11 of our series on understanding binary options. This video is titled Profit versus Actual Profit, and actually, compared to our other videos, we actually start out on a very optimistic note. We consider profitable trades here, that is to say, trades which are successful, and then we bring it down to earth. We try and look at the profit that we make on a trade, and we try and estimate what really is the profit that we've made, as in, really, how much money have we successfully made off of that trade. So let's start, as we always do, by a quick review of binary option trading. Essentially, we pick a commodity or currency or stock or index, and each of these has a current value at any given point in time, right before we're ready to make our bid or our trade. And binary option trading relies on our ability to predict what that value is going to be sometime in the future. We call if we think that future value is going to go up, and we put if we think that value is going to go down. And being right gets us a percentage of what we put in, but being wrong means we lose all of what we invested. So let's take a look at an example where we make a profit. Let's say we invested $100, and we refer to this as the amount invested, denoted by A. And let's say we're right, no matter whether we decided to call or put. Let's say we were right. Let's say the rate of return, which is denoted by R, was 70% or 0.7. Thus, we made a profit of 0.7 times what we put in, $70. And we're like, okay, we made $70, and given this model for any kind of trade that we make, our profit can be computed as A times R, the amount we invested times the rate of return. It's a very simple and very straightforward view, but does it really reflect the actual profit, the actual amount that we make? In order to understand whether what the actual profit is and whether that profit reflects the actual profit, we need to understand just what else went into the trade. So herein, I'm going to list a number of factors that I consider especially relevant, and we should note that some of these factors may mean more to other people than common traders, while in certain cases there may be additional factors which I haven't even mentioned here. So let's start by talking about foreign transaction fees. These are fees that we need to pay in order to get money in our trading account, which we can then use to make trades. This is particularly relevant for me because I live in the United States, and a number of the binary option trading websites are owned by companies that are based in locations such as Cyprus. And each time I transfer money into the account, I have to pay a foreign transaction fee, and it's particularly relevant for me, and I guess other traders from the United States, and possibly other countries where such fees apply. Let's say there's maybe some infrastructure-related cost. Let's say we do need to consider that when we're trading online, we need to have a computer which we're operating, and that computer needs to be actively connected to the internet, and it usually can't be a very slow connection. It needs to be reasonably fast. I'm noting that this is typically negligible, since in today's day and age, just about everybody has a computer or some form of device, even tablets, and we have pretty fast connections. So I will say this is typically negligible, but it's worth mentioning all the same. And now the point that I really want to talk about is that for binary option trading, we've discussed a number of strategies thus far, and I know there's a lot of people who like to wait and watch the curves and see how things are going. They need to spend time researching, and what that time essentially equates to opportunity cost. So what is opportunity cost? It's a cost incurred when doing something, because if we weren't doing that something, we could probably be doing something else that would be beneficial to us. So we all have our jobs, and I know in my job I make a decent amount of money per hour. And let's say I wasn't doing binary option trading, it wouldn't mean I would be working extra hours at my job. But let's say I could pick up some side money doing some sort of online work. I know that you can get online work for things like transcribing audio tapes or audio files into text, and I know one can get paid as far as about $7 to $10 per hour just on that. So anytime researching a binary option trade, if we weren't spending that time, we may actually spend that time making other money for ourselves. So we need to take account of this opportunity cost. That being said, what's our practical profit? It's our raw profit, and that raw profit is what we listed in the previous slide, which is A times R, the amount we invested times the rate of return. Therefore, our practical profit is our raw profit minus any foreign transaction or other fees that may be imposed on us, the infrastructure cost that we may incur for the internet and the computer, and the opportunity cost. Once we sum all these up and we subtract it from the raw profit, that's when we get the practical profit we make. Okay, so the raw profit was actually reduced by a little bit. Is that it? Not quite, because the actual profit we make is the practical profit minus applicable taxes. Now, the reason I separated this out from the previous rectangle that talked about the practical profit is because a lot of us may argue, well, we shouldn't really bring taxes in here because, well, any kind of income you end up paying taxes. It's unfair to say that our real profit is diminished because of taxes. Even for salaries, we need to pay taxes. However, the reason I wanted to mention this and draw specific attention to this is because for a lot of binary option trading websites, which are regulated by gambling commissions, the tax rates are actually higher on money that we make as opposed to standard income. And therefore, considering the taxes that apply to any profits we make is an especially significant consideration. Therefore, what are we saying? The actual profit we make is the practical profit minus the applicable taxes. The practical profit is the raw profit we made minus any fees we paid, minus any infrastructure money that was spent, minus any opportunity cost. Thus, when we make a successful trade and we think we've made some money, we really need to be sure that that money is significant once we've deducted the costs for all of these additional things that went into the trade. Now, some of them, like the infrastructure cost, may be negligible, but others, like the opportunity cost and maybe the taxes, are not. Even fees for certain trades are not negligible. So please be very careful and consider these factors when you're trying to estimate exactly what you made off of a profit. So I'm going to stop this video here. Please subscribe if you liked it, and feel free to leave comments. And I'll see you in our next video. Thank you.